Welcome to BankBeat Conversations with Tom Bengtson. We appreciate you being here. My guest today is Tim Siegle. Tim is the CEO of First Resource Bank, which is in Stillwater, Minnesota, serves Minnesota and Wisconsin. Tim, thank you so much for being here.
Yeah, well, Tom, thanks for having me.
Well, I'm excited to have you on. I've known you for a long time. I know that we can have a good conversation about the general economy, the banking environment, and your own specific story with respect to First Resource, I do think is pretty interesting, so we'll get into that a little bit. And in fact, why don't we start there? I know for a fact that you started your career in banking a long time ago, and you grew up through a bank, and you have now evolved into a CEO and an owner. Kind of an interesting transition from one who works at a bank to actually having ownership at a bank. Tell us a little bit about your journey.
Yeah, thank you, Tom. I do feel incredibly blessed and so fortunate the way that life has played out for me. So I actually grew up in a family. My parents were school teachers, and my grandpa was president of a rural bank in rural North Dakota, Findlay, North Dakota, and my uncle had bought his stock out, and then my uncle had sold that stock and bought a bank in Fargo called State Bank of Fargo. And asked me shortly after he got there to come work for him. And State Bank of Fargo today is Bell Bank. And I worked for my uncle for 13 fabulous years. I honestly thought I would be there forever. And we would have been good. We would have been really good just being there. Well, the door opened one day. I got a phone call about investing in a bank, in a small rural bank in Cavalier, North Dakota, and going up there to be the CEO and the president. And obviously, like I said, this was not what I was thinking my career would look like, but ownership seemed to all of a sudden kind of fell in my lap, an opportunity to own a portion of a bank, and that doesn't happen very often. And so my family and I took the plunge and moved to Cavalier, North Dakota. Second year we were there, we branched that bank into Grand Forks. They opened up a second office in Grand Forks a few years after that, and then bought banks in Hallock, Minnesota, Argyle, Minnesota, Mahnomen, Minnesota, Crookston, Minnesota. We ended up, the bank was called United Valley Bank. We had 9 locations in North Dakota, northern Minnesota, and at the same time, invested in a bank personally invested in a bank down here in the Twin Cities. It was called Eagle Valley Bank. And couldn't have timed it worse. The Great Recession hit right after I had put money in, and we played every card we could. I mean, it was a very trying time in the banking industry, and we played every card that we could. Ultimately, 3 of us essentially owned the bank when the dust settled. My son Aaron came to work for us, and number of years after that, it's probably, I'm not even sure, maybe 8 years ago, when Aaron came on 9 years ago, and when he came on with the bank really turned a corner and took off. And Aaron and I had an opportunity to put together a partnership group and to buy some of the stock of my partners, and with the idea that Aaron would be the president of the bank, I would have a chance to be the CEO, and we'd kind of do this, my final chapter in banking together before I ultimately retire. And so we moved down to the cities, and so here we are.
Yeah, so there's a lot of transitions here.
Yeah.
First of all, you talk about working in small towns like Findlay, North Dakota.
Yeah, right.
You know,
right.
I mean, this is a pretty small community.
Yeah.
And then you talk about North Dakota, northern Minnesota, which is sort of one arena, but then you come to the Twin Cities. That's a whole nother arena, and that's a big decision in itself, to decide to kind of move your professional aspirations to a major metro area when what you were used to was pretty smaller markets.
You know,
talk about that.
Yeah, Tom, great, and you're 100% right. You're talking about 2 mentalities, 2 different worlds of thought. But I would tell you first and foremost that I ended up investing in the bank down here to learn it. Being in North Dakota, northern Minnesota, and we had a lot of growth basically through acquisition. We were in economies that weren't growing. I thought I wanted to learn about an economy that was growing, and was there a spot for our bank United Valley Bank down here in the Twin Cities. Well, it really, I learned very quickly it was two worlds, and you're exactly right. But having said that, serving on the board here for a number of years, I was able to learn it. And but I'd also tell you, you're still, a lot of the fundamentals are the same. Okay, you're working with people, you're working with relationships, you're working with lenders, you're working with regulators, you're working with in an industry that I have become extremely familiar with, and so it maybe wasn't in terms of a career standpoint, and I wasn't stepping into something down here that was broken. I was stepping into something here that was very much fixed and running very well, and so I would say that the transition wasn't as dramatic as what it probably sounds. Unfortunately, right after I got here, COVID hit, and that was a game. Then it's like, man, that's kind of a game changer for everyone.
Mm-hmm. Sure, and then you've had, and I'll call it a blessing, the opportunity to work with your son.
Absolutely.
So here's a guy who I understand has a regulatory background. He was with one of the agencies,
Yeah.
and then he came over to the bank. So first of all, him deciding to come and work with Dad is kind of a thing in and of itself. And then to actually partner with you in the leadership of that
I
bank.
didn't know what his problem was there. He had enough around me to know that this is what he knew what he was signing up for. But having said that, I am, Tom, every chapter of my life is the best, and I'm in the best chapter right now. I love being grandpa. I love being dad. I love being the CEO of a community bank. Every chapter of my life is the best, and to have this opportunity, I am extremely proud of the bank that we work for. I'm extremely proud of Aaron, and it's been a real gift for me to work with my son.
Sure. Well, that's great, and we really appreciate hearing that. And the whole banking industry is full of really great personal stories like this, which often don't get told. That's part of what we like to do here at BankBeat, but we really appreciate you sharing some of that background. But let's turn the conversation into something a little bit more general. Very interesting time for the economy and for banking. Let's just start with the economy. What are you seeing? We've got folks who are concerned about high interest rates and believe that we might be heading into recession. But on the other hand, we have strong employment, and there are a lot of signs that things are going pretty well. So how do you see it?
Well, I would say it's a mixed bag. Okay, so first and foremost, I think this is a real challenging time in the banking industry. I have done this for a long time. So I'm 64 years old. I started when I got out of college. I have seen a lot. Okay, I have seen great recessions. I have seen great times. I have seen times that are not. This is a unique time. I have not seen in my career, usually when things aren't going well, it's because of asset quality. It's loans that are not, performing, and that affects everything else. Today, for the most part in our industry, the loan portfolios of the banking industry are very, very, very good. What has hit the banks hard is the dramatic increase in interest rates in a very short period of time, and it has just hammered margins on banks. And so when you haven't been able to reprice the assets anywhere near as quickly as what liabilities repriced at. And when that happens, earnings have suffered dramatically. And so, and it's like, you look at, and honestly, every day this changes. There can be things that affect the economy tomorrow. It can be a war someplace. It can be things that we don't know tomorrow that might happen that may change, or affect interest rates dramatically. But what we know today, what we know right now, as we sit here right now, I think we're in a high interest rate environment for a prolonged period of time. I do not think we're going to see interest rates going back to where they were. I think that the Fed kept them artificially low, which was part of the problem with inflation. And I do think that kind of given where the economy is, I am concerned about deficits that our country has. The interest on the budget is that the budget that's being paid right now versus what it was. We were deficit spending before interest rates went up, and what our country is paying right now is significantly more. And so I do think all of this is going to come into play. And will the country be a recession? I don't know. I don't know. I don't know. You listen to one economist, that'll tell you yes, and one will tell you no. They know more than me.
Sure.
I don't know.
if you put yourself, pretend you're on the FOMC. Are you seeing a soft landing? Do you feel like the work you're doing on interest rates is working? Or I think I heard you say you kind of expect this situation to last for a while.
I do, and I would say, is it working? Yes, I do. I think inflation has come down, so I think it is. I think that the question is the economy doing well because of government spending? Okay, and I think that is part of it. And it's like, so we have put a lot of money into the economy, and and when that slows down, what do you got? And again, I'm not here to pretend that I know, but I think there will be. I'm going to predict a soft landing. I think that it will, but I think that it's just going to be a new world. I think that interest rates are. We're going to have to get used to the fact that mortgage rates are what they are. I think that it is just going to take time for the world to adjust back to a little higher interest rate.
Not to completely discourage all young potential home buyers, right?
No, right? No, no. In fact, not at all.
Yeah.
In fact, I would argue with you that home buying, and in fact, I would encourage. I absolutely would encourage you to buy a house, or obviously it's got to make sense.
Yeah.
If you're going to wait for interest rates to go down, you might be waiting for a while. That's the truth. But having said that, if you want to build wealth, personal wealth, okay, if you want to increase your net worth, it's in your home. I mean, it starts there.
That's where it starts.
there.
Yeah,
I think, Tom, I don't know. I mean, I think that I look at my own personal world,
of course.
Our generation. That's how we built our net worth.
Where it starts.
It starts with our home.
No question about it.
And the sooner you do that, homes don't appear to be going down in value. Okay,
Right.
So the sooner you do that,
no, that's a good point. Good point. So now to bring the conversation even in a little bit closer, think about just your own bank and your customers. Are you seeing loan demand there? What are your customers telling you? Are they cautious or are they bullish?
I would say it's slowed way down, Tom. I mean, it has slowed way down. There's no question it has slowed down. We aren't seeing. I would say 2 years ago we had a pipeline that was full, very full. We had a lot of deals going. We still have some. I would say it hasn't shut off. We've got some deals going, but I would say it has slowed down significantly. I think people are a little more cautious. Again, all of a sudden, if you're paying an interest rate in the 7s, 8s, 9% versus 2 years ago, and you might have been in the 3s and 4s, the cash flow, it just affects so many things, and so it's definitely slowing down.
Sure. And in that environment, the bank, of course, still has aspirations to grow, and you have a business plan and so forth. And what I hear from bankers is that a couple of the really difficult areas to navigate for banks is staffing, finding talent, attracting them to the bank, and retaining them. There's all kinds of competitors out there who want your best and brightest.
Right.
So let's I want to ask you about that, and then the next thing I want to do is I want to ask you a little bit about technology. But let's start with that staffing piece first.
Yeah.
You're in a growing organization.
Right.
How do you bring people in? How do you get them excited? How do you approach that?
Tom, that is a great question. I mean, honestly, that is seriously today in this environment where where deals aren't flowing. Okay, it's easier to bring somebody in when interest rates are low. Okay, and then they can bring customers that will follow. Okay, and bring business with them. Today, their customers have loans at lower rates. Okay, so they're probably not coming, or they're not refinancing into a higher rate to come, and so it's a little more challenging, and yet it's the relationship. It's the employees that. Okay, fine. That deal's probably going to stay where it is, and it is going to stay where it is. But it's employees, it's people that have relationships. It can be a frustrating time where bankers want to get deals, they want to do deals, and they aren't out there, or management's not letting them be there. Liquidity is another challenge. Is a real big challenge, and if banks don't have liquidity, they're going to be very selective in what type of lending that they're going to do.
Yeah. And let me ask you about technology. I mean, it's so interesting how things have evolved in the last few years, and I do think that the pandemic kind of put the tech development on steroids, really advanced it a lot in a short amount of time. And it used to be that being a good banker was about assessing credit risk and really having that credit side figured out well. And I know that that's still important, but now it's as much about the delivery of the services as it is about assessing the credit risk. And the service delivery was always important, but I don't think it was as important as it is today. And that's where technology really seems to be playing a big role. And it's tricky because for a lot of bankers, that's completely outside their area of expertise, right? I mean, we're not, if we were IT people, we probably wouldn't be bankers, right? Or you wouldn't be a banker, you know? But yet that's a super important piece in all of this. So what do you make of technology? How do you approach it at your organization? What are your priorities and how do you address that?
You know, that is, it's really that's a large general topic, but I would say first and foremost, there's no question that life is changing, okay? And if you were to go into community banks today, teller traffic is down significantly, okay? And why is that? It's down because people can bank on their cell phone. It's down because of internet banking. It's down because they wrote a remote deposit. You know, small businesses they don't have to go to the bank. So you got to, from our perspective, you got to be in the game, okay? You know, and you also got to meet people where they're at, because if you're not going to be. You may as well just get out, because and it comes at a huge cost. It's very expensive. There are concerns of fraud. The game just changes significantly with that. Not only that, your facilities. I think the last 3 remodels we did, we took our teller lines out. We don't even have teller lines in the bank. We've got desks where people work at, and but that's all technology driven. And no, I can't sit here and tell you this is how we do it or this is what we do, because that's not in my.
You've surrounded yourself with people who know
way smarter than me,
of
exactly.
Course,
you know,
course.
and you have to trust them.
But it's a little tricky, right? Because I think historically, bank presidents, bank CEOs, bank owners have been able to make judgments based on things that they know. Whereas now you're kind of being asked to make judgments about tech-based things which you might not completely understand. That's hard.
Yeah,
I would imagine.
You know, and Tom, so therefore, you hire people, you outsource to people that you trust, okay? And how do you know who to trust, okay? You know, and how do you know that they're getting the right training, you know? And so you have to look at references. You look at people that, you know, there's a wide variety of ways of doing that. But at the end of the day, no, you're 100% right. But I would tell you that even, and not just technology, but there are many facets of the bank where you're hiring people that are much smarter and much more of expertise in certain areas of the bank than I ever will be. And I mean, especially at this age of my life, that's not going to happen.
Sure. Well, let's kind of bring this all to a close. We're just entering the fourth quarter of the year. Fourth quarter is often when banks do some strategic planning. They look out a year, they begin to make budgets for the coming year and so forth. What kinds of things are you bringing into that strategic planning discussion at this time as you and your team look to 2024?
You know what? I think first and foremost it's deposits. Okay. And it's inexpensive deposits. Today, what's changed dramatically in this industry over the last couple of years has been the dynamics of the balance sheet. And where it used to be asset driven, where loans were the primary driver in the bank, today it's the deposit side, it's the liability side. How can you bring in deposits that may have, you know, and what niche can you find? And all the banks are looking for them, okay? We're all in the same game. But if you're not finding deposits, you're not going to make loans, okay? And so your growth is going to be, everything's going to be, the primary driver is going to be the liability side, the deposit side of the balance sheet. And and I would say that if there was a big number one in terms of a strategy for 2024, it's going to be how we're going to increase the deposit side of the bank.
Tim, thank you very much for sharing these thoughts. I think this is really interesting stuff. We will follow the things that you've talked about. You're right about the deposits. Certainly a lot of bankers are talking about that, and it will be interesting to see how different organizations choose to address that challenge as we go into the new year.
Tom, thank you. You know, I want to. I'm going to back up for a second. Like I said, every chapter of my life, I said I love being dad. I love being grandpa. I love being a banker. And Tom, through the relations that I've built, like relationships like you, the Bank Holding Company Association and NFR, I will tell you, it has enhanced my career and has enhanced our bank significantly. So when you say thank you, no, Tom, the truth is thank you.
Well, Tim, that's very kind. I do appreciate that. This has been another BankBeat conversation with Tom Bengtson. Thank you for joining us, and we look forward to seeing you down the line.